Hello, everybody. My name is Drew Dosek, and welcome to Trading the Close. Guys, I warned you yesterday. Powell came out and did have a speech. Now, we're not crashing. We're just selling. The markets are selling today. Very steep sell for most of the day. Some of the indices weren't hit as hard, but they're all starting to point towards further downside in the near term. Guys, one major theme that I've got, or at least a phrase stuck in my head: don't fight the Fed. The Fed saying the stocks are overbought. Investors should hear that, and investors should be looking for an exit, at least for the near term. So let's jump into the market summary board today. And actually, first, before that, tomorrow we have GDP reporting at 8:30 in the morning, also existing home sales too. So we could have some market movements before the open tomorrow. Stay posted for that tomorrow. So into the market summary board we go. Dow Jones down 0.42%, NASDAQ down 0.41%, S&P 500 down 0.34%. U.S. oil, nice pop on U.S. oil today, up 1.85%. Gold retreating slightly, down 0.91%. And Bitcoin is trying to fight back to get above the neckline that we've been highlighting on the show for the past about week to 2 weeks or so. So let's jump into the S&P 500 heat map. And as we see here, we've got a little bit more red on the board. Again, we're not crashing, we're not selling, but cracks are emerging in the markets. And you're starting to have some of the bigger names put in some red days on the charts, such as NVIDIA, Apple, Google, all down at least around 1%, up to round 2 on Google, 1.82 on Oracle, Palantir down 1.64%, Netflix down 1.22%. Though we do have Tesla. Look at this one shining star over here, taking up all the green on the screen, up 3.98%. We're going to get into the daily chart there in a little bit to show you what I see could be some great opportunities to invest into Tesla. All right, so let's jump into S&P 500, which is SPX. And you see here the price action. We did illustrate how we did get back into this inclining parallel on the top end of the screen. But then today we were testing with breaking down underneath it. So far right now, S&P 500 is still saved, but cracks are emerging to start pulling price a little bit lower. You could see throughout the 10-minute chart on the price action today, we actually gapped up. We were looking like we were going to get a decent bounce from this consolidation that occurred at the end of the day yesterday, but then we quickly got right back into the consolidation area and then started going lower. We went even underneath this parallel, and then you can see really it's been a battle on this parallel for the majority of the afternoon. So far at the very end of the day, we're starting to poke up and get a little bit higher. So I go back to the daily chart, and I've adjusted this inclining trend line to hit this pivot right here perfectly. So that's going to be the line in the sand to know that, yes, we are going to start going down further. Now, just like these other times when price did breach just a little bit, we need to have price breach and then have continued selling pressure for any sort of sustained sell on the markets. We're a couple steps away, but guys, I want to bring your attention to this. I found this parallel today from one of our members in the live day trading room. And guys, let me just tell you this. This is one of the greatest parts of our live day trading room. We have a big group of members that have been educated with technical analysis skills that we deploy during the live day trading room, but they also submit charts and things that they see. In essence, we're expanding our horizon on all the eyes looking at the charts up 500x, 600x on what we're able to do as just individuals. So all of these eyes together, check out this parallel on the SPY. Now, this is an ETF for the S&P 500, so it's slightly different than the SPX. Let me full screen this so you can see it. Beautiful inclining parallel channel on the weekly time frame. And if you notice, we're right up here near the top end of this parallel. The top end, to be exact, is right around, if we're going to go into this week, the very end of this week, 674.59. Next week is going to be closer to 675, maybe even around 676. So you can see we are very close from major resistance on this extremely long-term inclining parallel channel. Now, notice what happened the last time price ran up into the top portion. We retreated all the way back down, creating the bottom pivot and portion of this inclining parallel channel. If that happens, let's just say theoretically, if that does happen, we could be looking at a pullback upwards of around 20%. I'm not seeing that just yet. I'm seeing that we at least have about a 5 to 10% correction due for us in the markets with this massive move up. If we're pushing 11%, you notice there that that gets right on the top end of the chop before we had the big decline with all of the tariff threats earlier in this year. So it's just interesting. Keep this in mind. We're getting there near, as I said yesterday, it's basically the warning track. We're on the warning track of a potential fall or at least 5 to 10% correction in the markets. Next up, the Qs. The Qs, as you see here, this has been following this inclining trend line. As I zoom back out on the charts, this is a pivot that occurred back in July of 2024, connected over to the pivot from December of 2024. Now zoom into the charts a little bit further, and you could see this trend line right here so far has held price lower. We had one nice day closing above it. Then the following 2 days, we have now retreated from this area. So right now, this trend line certainly is the resistance for the Qs moving up. Tomorrow, that level is going to be roughly $600.53. First major area of support is going to be down here at 583.29, which could imply a drop of at least 2% on the Qs. Now, again, that's the first level of support. Notice how that lines up with this previous pivot too. But if we do have any sort of sell, we're more than likely coming at least down here to the 572.28, if more likely a break of this. So at least these are the first areas of support to be paying attention to on the Qs should this selling pressure persist and price pull back in. Next up, we've got SMH. Now, SMH, man, this has been an amazing chart, really pushing higher on the chart, pushing up into this inclining parallel channel. As we see back here, of course, at all-time highs, beautiful move there for it. The main area I'm watching now, I've got two trend lines. You can see one drawn right here from February of 2025, another one drawn here from March of 2025. That is telling me the upside potential with this trend line for the SMH, at least in the near term, right up here at $329.08. Notice how that also corresponds with the 50% area of this inclining parallel channel. That would be very, very solid resistance there on the SMH. Now for support, first area of support is this other trend line coming across, connecting this pivot high here. Notice when we got above, we didn't fight to get through. We just gapped right over it. We could always gap over this too going on the way down, but this would be the first area of support at $314.15, followed by the 306.40 area. Now the 306 area, the $306.40 area, that's going to be a more solid level of support. Next up, the IWM. Now notice here on the IWM, topping tail yesterday, just like the Dow Jones that we covered yesterday. Beautiful topping tail on the charts, and also tag this inclining trend line of resistance. Notice here, perfect tags, 1, 2, and then yesterday, perfect little tag, small breach. And then ever since doing that, price has just retreated on the charts. IWM support level will be the bottom portion of this parallel channel, which is roughly $235 on the screen. Next up, Dow Jones Industrial Average. You can see we did cover this yesterday with the topping tail, and what happened today? Kerplunk, right outside of this inclining wedge. Now, this inclining wedge has been going on for a little while, basically the lows of April. This is a significant break right here. Now, what we need to see if we're going to see any more selling pressure in the markets is a continuation move, pushing price lower tomorrow. We need this to happen tomorrow. If we don't get that, we can reverse right back up inside this wedge. Then basically we're at square one, except for we've got this topping tail that price still needs to fight through. So both of these signs, the topping tail and this trend line break, are all shifting probabilities for more downside in the Dow Jones. We'll see if we get that continuation move tomorrow. If so, game on. And then this area becomes resistance for anybody interested in shorting the DJI. Next up, we've got Bitcoin. Bitcoin, as you see here, we've got this declining neckline. All right. And so for anybody that's watching this for the first time, let me just review. We've had a beautiful inverse head and shoulders with the left shoulder here, the head here, and then the right shoulder here, designated with this neckline. Price broke out of it, got rejected right here at this pivot high, didn't meet the measured move up here at 119,391. But as we see now, price today got even lower. It was looking like we were going to start marching lower on the charts of Bitcoin, but it's saved itself so far. Price is now above this neckline. Now, Bitcoin closes tonight at 8 o'clock Eastern time, so be watching if price stays above $113,160 or $133. If it does, then we're likely going to start marching a little bit higher on the charts, maybe even catch resistance here at this 50% area of the parallel at $114,458, followed by this area right here, $115,000 on the chart, both of which would be solid, stout areas of resistance to be mindful of if you're a bull in Bitcoin. Next up, gold. Now, we did talk about this too. Gold was just extended. It needed some sort of pullback, and that's kind of what we're getting today. We're still on the daily RSI. This is what's displayed down at the bottom of the screen. Notice the RSI is over 70. When we're over 70, the RSI, which is the relative strength indicator, that does imply we're overbought near term and should have price come back in. But what's curious about this, the markets are coming in a little bit and gold's coming in. So now gold follows the market tick for tick. That's unusual. Gold's supposed to be a defensive play. The markets are a risk on play. So they're all combined and moving in the same direction now. A little bit curious. Eventually that will diverge. And then we will have gold acting on its own with a place of a place of defensive investment opportunities. But right now, price coming back down on the chart. You will have a little bit of support right here at these pivots at about $36.73, $3,673. And then you will have better support down here at $3,556.25. Next up, silver. Now notice here with this move up with silver, we did tag the resistance yesterday as I highlighted. Today, we made another tag of this resistance level, but are since now putting in some doji candles on the chart. That's showing a little indecision since we are up here at the top of the charts and we're starting to get equal amounts of sellers and buyers. This consolidation, if we continue with more dojis, is actually starting to paint a picture where we may start curling over just a little bit. Consider silver's had a phenomenal run. We'll watch how this consolidation plays out in the coming days to see if a bull flag forms or if we start having a little bit more downside on the chart of silver. But still, nonetheless, great move on silver. U.S. oil is trying to fight to get out of this bearish pattern and the bearish display on the charts. Still not there yet, but still a great move for it today, pushing up 1.9%. Next major areas of resistance that I'm watching to see if this bearish pattern can break is up here at $67.36. Notice that our high today got right under all of these pivots that you see displayed here on the chart. Also, there's a pivot high here. This is going to be a stout area of resistance just for the near term, as in like today, tomorrow, and maybe a couple days further. But basically, very near term resistance on U.S. oil is basically where price is at $64.84. Next up, we've got nat gas. Nat gas really didn't do too much today, so it's not too much to report on. Basically moved sideways with a flat day. Still looking for resistance to get over at $3.20 on this declining trend line. Next area of resistance that will be more solid is up here at $3.35 with this inclining trend line there. Next up, we've got a couple stocks making some moves today. Now, Alibaba, this is like the Amazon out of Asia. Alibaba, they have their hands in a lot of different things, whether it's e-commerce or even financing too. People do Baba Pay or Alibaba Pay over there in Asia. It's a really neat service that they have. But you see here, we did negate this topping tail. So yesterday, we registered a topping tail on the charts. Today, gapped up nicely on Alibaba, pushing up 8.19%. This huge run. Now, look at this, guys. It's been up since August 28th. We're now up 49% on Baba. Geez, man, incredible move. Almost a stock that was left to be forgotten about. But you can see on technical analysis, we moved up. Bull flag consolidation. That was implying we were going to go higher. It just didn't imply we were going to go that much higher, up 50% basically. But still, it was painted on the charts. You could even almost interpret this as somewhat of an awkwardly shaped inverse head and shoulders pattern, but it ultimately did push price higher on the charts. Next area of resistance I'm watching is this longer term inclining trend line that you see has started back here in May of 2024, connected over with these major pivots that occurred on the chart. And that should be the next stopping spot for Baba. That's up here at $185.37. Right here on that trend line should be some very, very solid support, or pardon me, resistance for price action moving up through it. Likely we'll get a decent pullback back down here to this consolidation that occurred right around $167. Another chart making a good move today, we've got Marvel, MRVL. So a nice push higher, up 7.33%. Notice what it did here too. Right at the end of August, we had a big gap down off of earnings. And then we actually got support on this inclining parallel channel. If I scroll back out on the chart, you can see where that's coming from. Let me just pull it out a little bit more. So this started back here in May of 2021, contained the high end range and the low end range for most all of the price action, except for the little deviation that occurred here in April. And then we fought to get back up inside this parallel. Earnings report came out slamming price down, got support on this parallel, and has since now bounced up and even getting above this inclining trend line. Great fighting efforts there for Marvel. It's actually near term a little bit overbought with this accelerated move up. So a couple things to pay attention to with Marvel. There could be very good support right here on this inclining trend line. As you see, we fought to get back and erase the losses that occurred after earnings. Here was that candle right before earnings was announced. So now we're right back above it. Very good move for Marvel. Support will be right here on this inclining trend line at 75.16. That's going to be the most aggressive level. Another level of support down here at $68.64. But the way Marvel reacted today with some pressure on other areas of the markets, it's looking like we have more upside up here to 87.28, followed by this inclining trend line, which is roughly about $90. That's where I would be looking. However, you got to understand when stocks are overbought near term, it may take longer or may require periods of sideways consolidation to work out that overbought scenario so that they can then gain momentum and push up higher on the charts. I would be looking for any sort of pullbacks on Marvel to buy to move up to this next level of resistance. Next up, a chart that actually got slammed down pretty decently today, and this is Pinterest. Now, Pinterest, you can see what's happening here on this chart. We have an inverse head and shoulders pattern that is triggered. The measured move target is all the way up here at $42.67. Obviously, price has not gotten there. We've made an attempt, got rejected, made another attempt to break above this longer term declining trend line, got rejected, and made a third attempt, and since has gotten rejected. A lot of the bulls are losing hope in this, and this is what this looks like. Several different rejections taking place, but this pattern is still valid on the charts. And what would make it invalid is for price to get back down underneath this neckline where you see I've got support at $29.43. So if you're a bull on Pinterest, there's still hope. There's still chance for at least another attack of this declining trend line once we've shaken out some of the bulls that have lost hope. So watch for this support at 31.78. With the final level that I would want to play this sort of pattern down here under $30 at 29.43 as that this area of support, especially if we have continued selling in the coming days, could provide a nice bounce opportunity up here at least to this declining trend line. And considering now that this trend line has been tagged, busted through several times, this would be a weaker area of resistance, which would then allow that move up to 42.67. So some patience is required with this play. Be watching what goes on with price action down here in this area in case you do decide to get into Pinterest. Obviously, keep this neckline on your chart so that you know when this pattern has failed and at least will X out this measured move. It won't X out another attack of this declining trend line. So there's a lot of different ways to play this particular chart. It's just a matter of what your time horizon is. How long do you want to tie up capital in this play? Do you want to hold it all the way to this measured move? Or are you going to take the profits here, which still would be a nice area to take profits? Next up, Tesla. Speaking of time horizon on the charts. All right, guys. So look at what we've got going on here. We've got a left shoulder, a massive head, and then a collective right shoulder here that is broken out, retraced, and has since accelerated up on the charts. Nice move up on Tesla, now pushing up here as we see up 3.98% today, retesting the previous highs that occurred just 2 days ago on this most recent rally. So Tesla, though, if you look at the chart, overbought, right? We're overbought near term, pushing above 70 on the RSI. But there's a measured move with this inverse head and shoulders pattern up here at $512.97. And folks may say, hey, Drew, that's way up there. It's not getting there. The markets are about to start to curl over. At least looks like we should have some sort of pullback in the markets. Well, yes, you're right. But that could give you a buying opportunity at a lower price level to then get the support and bounce up to that measured move. If you don't think this measured move will get tagged, you may be right. However, let's go back on the chart and look at another measured move to see what happened in that situation. So we go into Tesla, and also this is a big head and shoulders. And sometimes I'm leery on some of these big head and shoulders. But if you notice here on the chart, we've got another massive head and shoulders over here. We have a collective massive left shoulder, a head, and bear with me drawing this, and then a huge right shoulder. And this measured move played out when it went up here into 480. It was 480 and change. There was a reason why Tesla didn't get up to $500 on this March, and it was because the measured move from this inverse head and shoulders was in the 480 range. It wasn't at 500. And other technical analysis traders like myself saw this pattern develop, and we saw this target on our charts, and then the selling pressure came in, as I've said, before $500. Now this new head and shoulders is taking us above $500, which would be new all-time highs on Tesla. So watch for any pullbacks on the market, particularly here at 390.53, followed up on this inclining trend line where you see price had a difficult time getting above before breaking out. Both of these areas would be support. This inclining trend line right around $374 to $375 whenever price and however long it takes price to come down into it. But this could be a great buying opportunity. Mark this, put some alerts on your chart should price start retreating on Tesla for a potential completion of this inverse head and shoulder measured move. Last up, we've got Hood. Now, notice this, guys. Hood has really been marching up the charts incredibly. You know, we had our low. A lot of charts are like this too, with the April lows being so low on the chart. But if you move this all the way up to today's high, Hood's up 338% to today's high from the April lows. That's just too much. That's too much, too soon, too much, too quick, even with this chop that's experienced. Now, a lot of this increase in cost has been because a Hood was going to be added to the S&P 500. That's already happened. They also are integrating potential shorting capabilities into their services, and they're also integrating the ability to trade derivatives for cryptocurrency. So in some form, end users will be able to trade crypto on Hood. Now they're not going to be able to actually physically hold them. They're going to be trading derivatives. But nonetheless, you can see here on the chart, we've had just basically a diagonally straight up on the chart move over the past, 1, 2, 3, 4, 5, 6, 7, now 8 trading days, getting above this inclining trend line. And actually it didn't confirm above it today though, folks. And it's creating 2 days with narrow body bars on the candles. Now, guys, here's a tip. Hood looks overbought. It definitely is overbought near term. But when this pattern develops on the screen, you need to know what to do with it, right? And wouldn't it be awesome to know if there's a flashing sign on the chart that's telling you price is about to change and this could help you make some money? Well, guess what? There is. I made an educational course right off of the patterns on this chart to help everybody make money. It's called Mastering the Overnight Trade with the Sleeper Hold. Now, no, I'm not trading overnight. I identify patterns that are telling me price is about to change. I execute a trade and then wake up the next morning with profits. It's a beautiful thing, folks. You can go ahead and let your money work for you overnight, get some profits in the morning. Or if you want to do it, you can also use it on a longer term swing trading basis. It's where I find some of my biggest winners in the small cap catalyst that I run here at Verified Investing. Definitely recommend you guys to check it out because this is looking a little topsy for me on the charts. Notice that we were all the way above the RSI of 70 here, but now we're getting higher on the charts and the RSI is lower. So that's some divergence that's going on here on the chart that needs to be sorted out. The likelihood Hood is coming in a little bit more in the near future is high. Watch for a break of this trend line. The next area of support is going to be 113.63, followed by $106.37. And then lastly, potentially as low as $91.71. But this has been a mighty run that needs to have some digestion in it. Nonetheless, congratulations to Hood. You know, way to go, Hood, for doing what you've done. But I think it's a little overdone in the near term for now. All right, guys, that wraps up Trading the Close. Can't wait to be back here with you guys tomorrow. Thank you so much for tuning in. Don't forget to hit the thumbs up, like, and subscribe to the video. Send this to your friends. We want to make them financially independent so you can have a great rest of your life. Thanks again, folks. I'll be back on tomorrow. Look forward to seeing you then. Until then, take care.